Hello, everybody. It is the Dark Conservatarian, and I am back with another Strike Force news stream. Hope you are all having a pretty good Saturday, and so far a good Labor Day weekend, and my weekend is doing pretty decently as well. So what I have right now in the news is some articles that I came across on Twitter, shared by Reuters, their Twitter page and whatnot, talking about Trump's tariffs. And in case all of you do not know, I am a libertarian free market capitalist, which means I am generally, if not completely, against tariffs and the restrictions of free international trade. And I mean, that's what I hold by principle. By practice, it's a little bit of a different story, but by principle, I am against this because I am, well, just naturally for free trade as for the sake of being consistent with libertarianism. So, anyway, this from Reuters.com. Trump ready to ratchet up China trade war with more tariffs report. And also, I gotta put in perspective that one of the big reasons as to why the Great Depression happened, I mean, I'm sure there was other contributing factors in this as well, but excuse me. But also a contributing reason as to why the Great Depression did happen was because Herbert Hoover put tariffs on I think it was farm goods was what I recall it being. With this, I don't think it's farm goods so much. I think, well, there's the aluminum and steel tariffs, but those are more Mexico related. But let's just read what this is about to see more specifically what Donald Trump has wanted to tariff on China. Washington, Reuters. U.S. President Donald Trump is prepared to quickly ramp up a trade war with China and has told aides he is ready to impose tariffs on $200 billion more in Chinese imports as soon as a public comment period on the plan ends next week. Bloomberg News reported on Thursday. Now that I am no expert, but I definitely would think that $200 billion goes both ways. You are going to lose a lot of money and income in the economy with putting tariffs on $200 billion worth of goods. Yeesh. The White House declined comment on the Bloomberg report, which cited 6 unidentified sources and deflated markets. Wait, okay, so this is coming from Bloomberg, and it's coming from 6 unidentified sources. So this is kind of looking like some sketchy reporting / journalism right here. I mean, as far as what I generally hear of Reuters, they are a reliable source, but Bloomberg, unidentified sources. The S&P hit session lows, and the U.S. dollar, Chinese yuan, and U.S. Treasury yields also fell. Trump has credited his electoral success to his hard line on trade, which he has argued hurts U.S. workers and favors foreign competitors. But at the same time, it is a form of cheaper labor. It's a labor alternative for businesses for them to take their plants overseas, so say China and India and all those other countries. But if here in the United States, if you want to if you want people to stay here in the United States, manufacture in the States, you're going to have to get rid of the minimum wage, or the companies are going to end up automating all the services and so on and so forth. But yeah, I mean, they will not be incentivized to bring cheap labor jobs back to the States unless they can pay something lower than $7.25 an hour, which by law they aren't allowed to do. So yeah, I mean, that would be my alternative. I mean, if you are going to institute these tariffs, get rid of the minimum wage entirely. Now, of course, I am by principle against tariffs and for free trade, and I am against the minimum wage, the minimum wage laws. But if you are going to institute tariffs, at least get rid of the minimum wage so that companies can have more options in what they can do as far as labor goes in the market. Trump is credited as okay. Washington is demanding Beijing improve market access and intellectual property protections for U.S. companies, cut industrial subsidies, and slash $375 billion trade gap. The The world's two largest, you know what would also help to rectify that $375 billion trade gap is if we like opened up the market on our oils and whatnot, our natural resources. That's the problem. I mean, maybe China will not be our biggest customer in those natural resources that we open up for our private companies to like, for lack of a better word, exploit. I mean, if they might, China might not be our biggest customer in that area, but maybe maybe companies from other countries might, to kind of rectify or compensate for that trade gap with China. The world's two largest economies have already applied tariffs to $50 billion of each other's goods in a tit-for-tat trade war. Talks aimed at easing tensions ended last week without major breakthroughs. So-called hard-line pressure-exerting methods of the U.S. side won't work on China and are not helpful to resolving the problem. Chinese Foreign Ministry spokeswoman Hua Chunying said on Friday when asked about the report. China's position is to resolve the issue via pragmatic talks on an equal basis, which is that the international community wants to see, she added. Washington's new proposed 25% tariffs would affect consumer products including home building supplies, technology products, bicycles, and apparel. A public comment period on the proposal is set to end on September 6, and Trump plans to impose the tariffs after that deadline, Bloomberg said. Some sources said Trump had not made his final decision. The Bloomberg report said Trump administration officials have been divided over how hard to push Beijing. I mean, how much of a push is it against Beijing? I mean, it sounds more like it would be a push against companies to not like take their business overseas. Trump, who has threatened to impose duties on virtually all of the more than $500 billion of Chinese goods exported to the United States each year, told Reuters in an interview earlier this month that resolving the trade war with China would take time and that he had no time frame for ending it. Take time. The thing is, as long as there is like a private companies, okay, I'm gonna read this last paragraph. The report on Trump's China stance coincides with the U.S. negotiations of pushing to hammer out a deal with Canadian counterparts to overhaul the North American Free Trade Agreement. End of article. Okay, and the thing is, you want to talk about ending the trade war with China? You're going to be hurting private businesses. I mean, okay, here's the thing. Here's the thing with putting in tariffs. You aren't so much as hurting the country that you're trying to put tariffs on. More like you are hurting the companies that decide to take their business overseas to that said country that you put tariffs on. More than anything else. Plus, you're hurting your own citizens with them ending up having to pay a higher dollar for a product. Like, say, yeah. Anyway, I'm kind of, I'm trying to keep track of my train of thought here, so excuse me, people. I'm trying to keep track of my train of thought, but sometimes I kind of lose it, especially when I'm trying to wrap my head around these, excuse me, these economic reports. Okay, I think that's the end of the article. Reuters apparently attaches one article right underneath another article. What they do. All right. So, Wall Street rally ends as risk selling grows on rising tariff fears. New York Reuters. U.S. stocks ended their 4-day winning streak on Thursday as risk reduction ahead of the long holiday weekend accelerated on growing trade anxieties. The broad, okay, honestly, I'm no economist, obviously, but I do not see as to how like an extended weekend, that being this Labor Day weekend, would have such a high effect on the economy and stocks. Like people just off the job just for 3 days. Like, eesh. Mm. The broad-based sell-off steepened in mid-afternoon following a Bloomberg report that U.S. President Donald Trump wants to impose proposed tariffs on an additional $200 billion of Chinese imports as early as next week, sooner than many expected. The CBOE Volatility Index, VIX, VIX, a gauge of investor expectations for near-term volatility, rose to a near 2-week high in a low-volume pre-holiday session, closing at 13.53. Now, don't ask me what that means because I have no idea. When you have low volume, it's harder for the market to absorb strong buying or selling pressure, said Sean Cruz, manager of trade strategy at TD Ameritrade in Jersey City, New Jersey. We still have trade highlight headlines coming out on a daily basis. Now, I don't care that much for Wall Street, just to be honest. Maybe they do have some form of legitimacy to what they do, but as far as I know, it's a whole bunch of banking and so on and so forth. You're handling other people's money. And if you are like handling other people's money, I mean, even the incredible Aspie, he made this point that he thinks that banking, like banks, is like the only business that needs to be heavily regulated, or he thinks that it should be, that it's called for that we heavily regulate banks because they aren't a legitimate business, like say an oil company or a food store, a grocery store, or something like that. And I can really understand the point that Incredible Aspie was trying to make in that one stream of Humane Minds, where he said that because in a bank you're handling other people's money, and if you don't handle it right, well, then what you could be doing could be of the same moral equivalency of theft, practically. The Bloomberg report coincided with continuing efforts by Canada and the United States to revamp the North American Free Trade Agreement, NAFTA, ahead of a Friday deadline. Apply Inc. Shares, Apple Inc., excuse me. Apple Inc. shares closed at a record high, rising 0.9% following news that it would unveil its latest iPhones on September 12th. Oh, so I guess these tariffs aren't targeting Apple and iPhone production more specifically, or at least Apple is saying to themselves, oh, these tariffs don't affect us that much. Amazon.com stock rose 0.2%, closing above $2,000 for the first time and edging the company closer to becoming the second U.S. company after Apple to reach $1 trillion in market value. The Dow Jones Industrial Average, DJI, fell 137.65 points, or 53%, to 25,986.92. The S&P 500 SPX lost 12.91 points, or 0.44%, to 2,901.13. And the NASDAQ Composite dropped 21.32 points, or 0.26%, to 8,088.36. Yeah, don't ask me of what that exactly means, but I'm just reading this off just in case anyone else is interested more specifically than myself. I mean, I try to grasp myself around these economic stats, but still. Of the 11 major sectors of the S&P 500, only utilities, SPLRCU, advanced. Campbell's Soup Company shares... Campbell's Soup has their own investment. Okay. The more you know, Campbell's Soup has an investment into Wall Street and the stock market. Campbell's Soup Company shares dipped 2.1% after it announced plans to sell its international and fresh refrigerated foods units and left open the possibility of putting the whole company up for sale. Interesting. Shares of Abercrombie and Fitch Company plunged 17.2% after the apparel retailer missed quarterly same-store sales estimates. I think Abercrombie and Fitch I have seen at the Town East Mall here in Wichita before. Discount retailers Dollar Tree Inc. and Dollar General Corporation were down 15.5% and 1% respectively, after both gave disappointing profit outlooks on margin worries. In economic news, the Federal Reserve's preferred inflation gauge, the core PCE price index, posted a 2% year-on-year increase, hitting the central bank's target and boosting the likelihood of additional rate hikes this year. Declining issues outnumbered advancing ones on the NYSE by a 1.84 to 1 ratio. On NASDAQ, a 1.36 to 1 ratio favored decliners. The S&P 500 posted 31 new 52-week highs and 1 new low. The NASDAQ Composite recorded 103 new highs and 39 new lows. Volume on U.S. exchanges was 5.99 billion shares, compared with the 6.09 billion average over the last 20 trading days. Okay. And now we're going to get to the more interesting part regarding the news on tariffs. As this Forbes magazine article goes talking about the hidden cost of tariffs is slower growth. And so, by principle, as I said earlier in the stream, I am for free trade and against tariffs. But by practice, this Forbes article also goes speaking against tariffs and for free markets, free trade, excuse me. Okay, just out of curiosity, how long is this article? It's kind of lengthy, but it shouldn't be too long. I mean, it's kind of expected with these Forbes magazine articles. They are always pretty long. All right. So this writer right here is Jeffrey Dorfman, Policy. I use economic insight to analyze issues and critique policy. Okay, so this is at least not that Dan Spinelli, is that what his name was? This at least wasn't that Dan Spinelli character that Andy Worski was complaining about, and I would say rightfully so, that Andy Worski was complaining about a year ago, actually even a little bit more than a year ago. And the thing that I have to say about Forbes is that generally I think they are a reliable source, but Dan Spinelli, you got to watch out for him and make sure you're not reading any articles from him because he misrepresented the shit out of Andy Worski. And again, I think that Forbes is generally reliable, but Andy Worski does not have that same attitude. They thought that he and Chris both thought that all of Forbes was unreliable just because of the one writer, Dan Spinelli, which was quite ridiculous for me. But anyways, the hidden cost of tariffs is slower growth. Tariffs help uncompetitive industries by putting a penalty on imports in the form of a tax. Domestic producers that would otherwise lose market share to imports are able to produce more and find domestic markets for those goods. Tariffs help uncompetitive industries. Yeah, I mean, it sounds like that some of the intent of tariffs is a form of crony capitalism or corporatism or plutocracy, as Madwena Lauren likes to call it more specifically, which I am against plutocracy because it's like a form of pseudo-capitalism, is what I would call it. It's pseudo-capitalism. All right. And so, yeah, that's another reason that I would be against tariffs. I mean, if you're a company that is failing, that is not satisfying customers, then I think by market standards, you should fail and not be propped up by the government via government subsidies, regulations that like kill your competitors, or in the form of tariffs. None of that bullcrap, please. This maintains jobs in the protected industry, and by keeping factories open, also means more capital stays in the industry benefiting from the tariffs. These outcomes are pretty much the point of the tariffs, but they impose both obvious and hidden costs on the economy. The obvious costs are twofold. First, consumers of the products sold by the protected industry must pay a higher price thanks to the tariffs. Second, Jobs and profits are lost in the rest of the economy because the higher prices induced by the tariffs leave less money to be spent on everything else. These costs have been much discussed during the recent ramp up in trade disputes and tariff levying. What has been mostly overlooked as a hidden cost of tariffs, slower economic growth. Okay, so this is a Twitter link that they provided right here. At any given time, our economy has a certain amount of capital to invest in productive activities. Tariffs protect uncompetitive businesses from shrinking or going bankrupt. Yeah, which I am against that. And I think the supermajority of people within the states and just around the world in general is against propping up and preventing these companies from going bankrupt or shrinking. I mean, especially if they can't compete. Like, imagine if Blockbuster, you know how Blockbuster got absolutely destroyed by Netflix. You're not seeing Blockbuster stores across the states as much anymore. I mean, there are plenty of videos talking about the fall of Blockbuster, but imagine if like the government was to like help prop up Blockbuster in order to help them stay in competition with Netflix. That would be plutocracy for Blockbuster, essentially. Because these protected industries are larger with the tariffs than without them, more capital is trapped in those low growth or shrinking sectors of the economy benefiting from tariffs. That lowers the average return on capital. Without tariffs, those industries would shrink and capital would be reallocated to faster growing parts of the economy. This reallocation of capital would boost aggregate output thanks to the faster growth and mean there would be more future capital to invest in other productive uses. Economies with more capital have higher economic growth and higher wages thanks to the productivity derived from that capital. Thus, removal of tariffs would boost economic growth and create a feedback loop that would keep economic growth accelerating. Interesting. People see the jobs saved by tariffs. Some understand the jobs lost in unfavored industries. Using a current example, steel tariffs save steel producing jobs, but cost far more jobs in steel using industries like the auto and construction industries. What few people spot is the slower growth from the misallocation of capital. Protectionism doesn't just mean current economic losses from both the taxes and the disruption of rearranging global logistic networks. It also means slower growth for as long as certain industries are protected. This effect compounds over time, with the effects growing for every year protectionism continues and protected industries remain larger than optimal. One thing markets are good at is allocating capital. Sure, they make mistakes and those investors lose money. Sometimes when enough bad capital allocation decisions are made, we get recessions. See real estate and the last recession. However, markets do a better job than politicians of choosing which industries to protect from foreign competition. More tariffs mean an inferior capital allocation, a lower average return on capital, and thus slower economic growth. You know, I wonder of what effect tariffs had to do with the 2008 real estate and the recession of the real estate crash and so on and so forth of 2008. A good analogy is the bailout of banks and automakers by Presidents Bush and Obama during the last recession. By trapping capital in the low growth industries of auto manufacturing and finance, the bailouts contributed to the slow growth of the recovery. If capital markets had been allowed to adjust more fully to the overinvestment in those two industries, growth could have been faster and the recovery quicker. Tariffs. Okay, I just heard my Discord go off, by the way. I'm going to have to check that here in a bit. Tariffs cost the economy jobs because the costs imposed on the rest of the economy outweigh the gains awarded to the protected industries. Unfortunately, that is not the end of the story. It gets even worse because tariffs cause capital to be misallocated. We suffer lower economic growth in both the short and long run. When you look at the big picture, tariffs are like an unwanted house guest that just won't leave. Every day, the damage continues to increase and the effects linger even after the tariffs are removed. End of article. So yeah, that was quite interesting, making the case against tariffs. Here, let me see. Huh. Oh, okay. Is just Mod Wayne sharing a link in my Discord server. What's Twitter looking like, by the way? All right. So that was quite interesting right there. Hmm. I'm going to have to share this article, this particular Forbes article, to S Man Speaks for him to put on one of his episodes of S Man Live, perhaps, because he, like me, is a free market libertarian capitalist, and he is also for free trade. And the fact that this Forbes article exposes how tariffs make a slower growing economy because of how that money is trapped in these failing businesses, these failing but propped up businesses that are put on life support by the government, that's a real damning case against tariffs. All right. Oh, is this the same guy? Yeah, Jeffrey Dorfman. Policy. Okay. Yeah, so same writer, and yeah, talking about economics again. Actually, this whole episode is devoted to nothing but economics. So I do not know of how well anyone else would have been interested or been able to like put in their 2 cents in this episode of Strike Force. I mean, maybe they would have. It would have been nice if I had like some co-hosts, but I'm doing fine on my own, I think. Um, Simple math reveals CEO pay is not hurting workers. Now, again, by principle, I could not care less if a rich guy owns like millions more than me, because I don't have that big jealousy complex. I mean, no offense to any economic leftists who like to make a big deal about rich people owning more than the working people, but overall, I just don't give a shit. Really. I mean, I couldn't care less. And if by principle there is no big deal that a richer dude has more money than a working people, then that's even more evidence to convince people why they as well shouldn't care for rich people owning more than us working class individuals. Okay, 1 second here. Oh, never mind. I keep on thinking that I am getting like a Discord message from JJ or something. But anyway, moving on. Simple math reveals CEO pay is not hurting workers. The Economic Policy Institute, a liberal think tank, is out with its annual report on CEO pay. In order to make the problem seem as large as possible, the authors focus on 350 of the largest companies in the US, finding those mega companies pay their CEOs an average of, excuse me, whoa, wait. The Economic Policy Institute, a liberal think tank, is out with its annual report on CEO pay. In order to make the problem seem as large as possible, the authors focus on 350 of the largest companies in the U.S., finding those mega companies pay their CEOs an average of $18.9 million in 2017. Damn, that's a lot of money. That is a lot for a year's wage. I'm not going to lie. Or 312 times as much as the average workers at those companies. Yeah, and I don't care. I mean, good for you, Mr. Moneybags. The idea is that such a huge disparity will spur you to action to fight this injustice to workers. Not me. Not I. Sorry. Okay, but a little simple math reveals that the issue of CEO pay is a trivial one, not worth the time of policymakers interested in worker welfare. Yeah, and the thing that I have with people who mentioned that, oh, this person is richer, whereas you have this homeless person that is just starving on the streets. Like, in reality, I think that even if you was to like increase taxes and increase welfare spending to help feed, clothe, and house that homeless person, um, that's the good part of it. But say if the rich person was still having his wealth grow exponentially, as long as the homeless person is getting fed, there is no immorality happening there in my book. I think it's really possible for a rich person's wealth to grow massively, but you can still at the same time, if you really think that it is a job of the taxpayer to feed everyone, then do that at the same time. All right. First, it is important to note that the pay of the CEOs in Lawrence Mischel and Jessica Scheider's report has little in common with CEO pay in general. While the 350 CEOs tracked for the report take home multi-million dollar pay packages full of salary, stock options, and the like, government statistics on worker pay tell us that for all 210,160 CEOs in the National Occupational Employment Statistics, OES, database from May 2017, the average CEO receives $196,050 in annual wages. If we took out the highest paid CEOs from EPI's reports, that average would drop. That's barely more than 1% of the $18.9 million for the particularly high paid CEOs in EPI's report. In fact, the ratio of the top 350 CEOs paid to average CEO pay is 96 to 1. Most CEOs have more in common with average workers than with high flying CEOs making 18 million per year. Oh. Yeah, I mean, those 350 CEOs that you're talking about the 1% of the 1%. That's funny. That like makes me recall back to that one skit that Freedom Tunes made. Making a skit of how the top 0.99% go complaining about the 0.01%. And then it was trying to make that as an analogy to say that if you live in the West, particularly if you live in the United States, you are in the 1% of the world, or at least most of the people who live in the United States, they are in like the 1% of the world as far as richest people goes. More importantly, regardless of the highlighted ratio of CEO to average worker pay, there is no link between worker pay and CEO pay. Using the OES data, we find that for all occupations, workers earn an average of $50,620, which totals $7.2 trillion given the 142.5 million workers included in the database. The 210,160 CEOs earned a total of $41.2 billion thanks to their $196,050 average salary. Yeah, that's not even like a $250,000 a year wage that people like Bernie Sanders and others like to complain about. If we do the math, we find that CEOs captured a whopping, quote unquote, 0.6% of all wages. If we took all salary away from all CEOs in America, not just the highest paid ones, and distributed it among all other workers, we other workers would each receive an additional $46 a year. Wow. That's not very significant. Okay. I'm just looking at this ad on the side, and I'm just wondering, is that like a real prosthetic hand right there made of plastic? I mean, on the one hand, it said that that kid lost his hand in that picture, but on the other, That's actually kind of cool. I mean, I think that anybody with like a prosthetic robotic arm or something like that is, in a way, kind of cool. Just saying, just saying. But anyway, as I was saying, an additional $46 a year. Yeah, in my mind, it would not be worth taxing the crap out of a given population of rich people just so that you can raise it to a meager $46 a year for all workers. Like it doesn't make any sense to me by principle or by in practice. In other words, all the CEOs in the entire country collectively are getting paid so much money that they are costing us ordinary Americans less than $1 per week. Yeah, $1 per week. I can't even buy a soda at Quick Trip with that. The effect is slightly bigger at those larger companies included in the EPI report. Those 350 companies have around 17 million employees. I am estimating that based on reports for all 500 companies in the S&P 500, or about 50,000 employees per company. If the CEOs at those companies agreed to work for free instead of an average of $18.9 million, the savings would be $6.6 billion per year. If we spread that equally among those 17 million employees, they could each be paid an extra $389 per year, around $7.50 per week. Wow. Just above the national minimum wage. Wow. You can like buy yourself lunch with that, but that's still like not significant enough for me to even believe in practice that we should be doing what the person explained right here in this paragraph of taxing them and then spreading that wealth to, say, their employees. Not worth it. Yeah, not worth it in principle or in practice. Now, $389 is a lot more than $46, so excessive CEO pay looms a bit larger at big companies than at most workplaces, but that still would represent less than a 1% raise for the other workers. I mean, that's the thing. I mean, what's the minimum requirement for like a working Joe to need in order to like get by in a year? Like, what is it, like $50,000? Isn't that like the minimum living standard for, at least here in the States anyways, the average? I mean, so $389 or $46, either one. Yeah, add those to like a $50,000 a year salary with an average Joe blue collar worker. That isn't real significant to add on top of their $50,000. No matter how much these CEO pay reports hype the issue, and no matter how readily the media jumps on those reports to stoke the fires of wealth envy, which, yeah, wealth envy. I mean, that's what it boils down to for me, in my opinion. I mean, I recall this one speech where Bernie Sanders was all like, the Walton family earns like so-and-so $1 million per year. He just mentioned that stat, and all of his supporters gone booing at that. Yeah, I lose. Like, people were just jealous. I mean, that just showed that all the people in that audience, at least, just have a bone of jealousy to pick with the Walton family and all other rich people. I mean, give up on principles? No, we're just jealous that they dare have more money than us. Anyway, the reality of the math is that CEO pay is not a significant factor in how much workers get paid because it just doesn't amount to enough money. Economics tells us that workers are paid what they are worth in labor markets. If they are not, a competitor will hire them away. Economics tells us that excessive CEO pay comes out of shareholders' pockets, not workers. However, many doubt these two facts, preferring to believe that market concentration has changed the calculus and allowed firms to exploit workers. Yeah, exploit workers. And sounding like Owen McDonald. Whether you believe standard economic theory or a more complicated version doesn't matter because the math trumps economics. You cannot deny the math. Total CEO pay isn't a large enough sum to move the needle on middle-class wages. My guess is that most CEOs who get paid $18.9 million per year or more are overpaid, but changing that fact won't do the rest of us any good. There are too few CEOs and too many ordinary workers for CEO pay to make any difference. End of article. Okay. So yeah, I mean, this guy seems like he's coming from a place of objectivity, having an objective mindset, because he's saying that okay, he's not actually saying that he believes that CEOs are getting overpaid. He just he says that he guesses that most CEOs who get $18.9 million per year or more are overpaid. I don't know. I mean, it's still like a bit of a bone to throw to economic leftists on the issue when he mentions in that last paragraph there of how rich people get overpaid. Anyway, this is an old article right here, but I came across it on one of my one of the recent streams of Modwayne Alarin, Modwayne's House of Fun, that I participated in. Like we were talking about capitalism and economics, and eventually the subject of minimum wages got brought up. And I was thinking to myself, you know what's another example that people like to use a lot to try and prop up the whole minimum wage principle? Raising the minimum wage, I mean? Seattle. So I thought I would search up statistics on that to try to see how they're doing. And so here we have an article from USA Today, and it's a fairly old one. Like, where's the exact date? Oh, yeah. June 27th, 2017. I mean, it's not that old. I mean, it's a little over a year old, but that's not too old in my mind. Seattle's $15 minimum wage may be hurting workers, report finds. As companies look for ways to cut costs, Seattle's $15 minimum wage law may be hurting hourly workers instead of helping them, according to a new report. A report from the University of Washington, UW, found that when wages increased to $13 in 2016, some companies may have responded by cutting low-wage workers' hours. The study, which was funded in part by the city of Seattle, found that workers clocked 9% fewer hours on average and earned $125 less each month after the most recent increase. Now, okay, that amount is not significant, I would say. So by practice, if you're for the minimum wage, then I guess this would not really be a convincing talking point to you to be against the minimum wage. But by principle, myself, I am against the minimum wage, like I said. Or did I? No, I think I would. No, I was just talking about free trade and tariffs a little bit earlier. But yeah. Actually, no, I did mention it in the minimum wage earlier, but I'm going to reiterate again. By principle, I'm against the minimum wage because I'm for private property rights, and that extends out to business rights and for a business owner to do with their business whatever they want. So by principle, I'm against the minimum wage. And from looking at this piece of evidence right here, I would say by practice, just because it has a little bit of negativity at it as well, by principle, I'm also against it as well. But heavily, or by practice, by practice, I am against it as well. But mostly by principle, am I against the minimum wage. If you're a low-skilled worker with one of those jobs, $125 a month is a sizable amount of money, Mark Long, a UW public policy professor and an author of the report, told the Seattle Times. It can be the difference between being able to pay your rent and not being able to pay your rent. Actually, when you put it that way, it is by principle pretty bad. Because imagine if like my income was to be decreased by $125 per month. Well, actually, I would still be able to pay my rent, but my living standard overall would still be fairly lowered. I mean, just for an example, I'm not going to reveal my income on here, but still, I mean, but yeah. In 2014, Seattle City Council voted to incrementally raise the minimum wage to $15 per hour. Red Feather says in the chat, "Hey everyone, hello Red Feather. I'm the only one on this stream, and I'm talking about economics. And you missed what I would say is arguably the best parts of this stream. We were talking about the cost of tariffs, and we were talking about how CEO pay is not an immoral thing." How it's not a bad thing by principle and in particular by practice. But so you'll probably be interested in like rewatching this stream if you ever get the chance. In 2014, Seattle City Council voted to incrementally raise the minimum wage to $15 per hour. The minimum wage increased from $9.47 to $11 per hour in 2015 and to $13 in 2016, according to the report. Under the law, businesses must raise the minimum wage to $15 for all workers by 2021. The study comes on the heels of a University of California, Berkeley report last week that found the law boosted restaurant workers' pay without costing jobs. Unlike the University of California study, the UW report examines low-wage workers across different sectors, not just restaurants, and was able to examine hours Seattle workers have worked since the 2016 increase took place. The study notes that, like other research, including the University of California study, they found the minimum wage increase had little effect on the restaurant industry. Well, heck, I'm always late. I was late for my own birth, said Red Feather. Oh, jeez. Okay. I got a question. Does being late in your due date on your birth, does that make a person just naturally grow bigger? Because I know that if you're like an early birth, that you risk of growing smaller when you become an adult. But if you're like a late birth, our chances are that you're going to become a bigger person when you're an adult. I don't know. I mean, is that a thing? Or would you even know, Red Feather? Seattle Mayor Ed Murray said he stands behind the $15 minimum wage law, Reuters reported. Yeah, well then, guy, your statistics say that you should be otherwise. The statistics of your own city and the statistics of how it's affecting your own city says otherwise, dude. Raising the minimum wage helps ensure more people who live and work. And also, I gotta ask, Ed Murray, are you for private property rights? Because if you are for private property rights, well then by principle you should also be against the $15 minimum wage law. Red Feather says, I don't know, never heard that before. Okay, then never mind. Raising the minimum wage helps ensure more people who live and work in Seattle can share in our city's success and helps fight income inequality, Murray said in a statement in response to the study. Across the country, many states have increased minimum wages above the federal minimum of $7.25 an hour, which has been in place since 2009. Last year, California Governor Jerry Brown and New York Governor Andrew Cuomo signed legislation that will eventually raise their state's minimum wage to $15 per hour. Okay, end of article. So anyway, all right, so you say that you have never heard of that before, Red Feather, but I'm going to like give a rather personal story. Oh, actually, it's not a story about me in particular, but one of my friends who is actually rather short, he explained that he was an early birth, and he thinks that one of the reasons why he was so short is because he was an early birth. I mean, I personally am 6 foot, so I'm not exactly short or small. I mean, I'm small in that I'm a skinny ass, but I'm not short. But I was just curious about you, because you said that you were like a late birth. But anyway, this is all that I have in the news. So yeah, I mean, if you're against plutocracy, which, if in case anybody is wondering, plutocracy is basically Red Feather says, well, I am 5'3". Last I checked, I think 5'3" is like above the national average for women. Anyway, so if you are against plutocracy, and to explain to everybody what plutocracy means, it is basically crony capitalism and corporatism. And I know that anybody who has been paying attention to politics and is around the internet has definitely heard those terms, but plutocracy, not so much. I was just introduced to the term plutocracy when I was on that one Mod Wayne's House of Fun stream. But if you are against plutocracy, the game being rigged against some for some companies to be propped up, some companies who are failing, but they are being like put on artificial life support by the government. And if you're against that, which is what basically plutocracy is, well, then you gotta be against tariffs. You cannot be against plutocracy and against free trade at the same time, in my mind. I mean, I have some subscribers of my own that are somewhat against free trade, free international trade, or at least they want to like heavily regulate it, like pull back NAFTA and TPP and so on and so forth. I mean, I don't know the nitty gritty details. I don't know the nitty gritty details of freaking NAFTA and TPP, but as far as I know, what I stand right now, I am for them because I am for free trade. Okay. So Red Feather says, so it didn't work in my favor that way. I want it to be 5-7. Okay. I gotcha. Yes, the bailouts are BS. Yeah, that's another form of plutocracy, everybody, is bailouts for businesses and subsidies for businesses. If you're against rigging the game on the market level, then you will be against bailouts, subsidies, and tariffs all together. As was just explained by our Forbes writer right here that I had for you. Tariffs, they help prop up failing businesses. So, yeah. And not only by principle is it that a bad thing, but also in practice, he explained that it slows down the growth of the economy because you have this money that is trapped in these companies that are not failing. Otherwise, if these companies were just allowed to fail, that money could go to other more lucrative businesses. Like, say, for example, if Blockbuster was propped up by the government. Now, we all know that Blockbuster actually failed in the end. They got their asses kicked by Netflix in the market as far as movies go. But imagine if Blockbuster was propped up and put on life support by the government. You would have all that money trapped into Blockbuster, and it would not go to other movie companies like Hulu and Netflix, and even another rising competitor called Family Video. I don't know if much of anyone like goes to Family Video often, but I've went there a few times. I mean, especially ever since, and they're basically like the same that Blockbuster is. They let you rent movies in a store, but they also let you rent video games, so that's pretty cool. Red Feather also says in the chat, I may agree with that if it weren't for the fact that corporations are considered individuals under the law. You mean how corporations are considered people? Yeah, I mean, I never explained that piece of logic. I never really understood that piece of logic. I mean, that whenever I hear corporations being referred to as people, it makes me think back to the debate that Dinesh D'Souza had with Cenk Uygur. And he was trying to defend corporations to such an extent to say that they were people, that corporations are people. Corporations, they are not people. They are, they are owned by people, but they are not people themselves. And then Ben Shapiro, and then next year, Ben Shapiro debates with Cenk Uygur, which overall I agree with Ben Shapiro. And I think he overall kicked Cenk Uygur's ass in that debate. But that was just the one part that made me cringe and disagree with Ben on, was when he kept on insisting that money is speech. I was like, no, words are speech. My vocals produce speech. Money is not necessarily speech. It can possibly be used to help prop up somebody's speech. Like, say, you buy a megaphone to help elevate the volume of your voice when you're talking. But other than that, money in of itself is not speech. Red Feather also says, I understand why they had to bail the banks out because many people would have lost their personal money. But the reason they needed a bailout was bad banking practices. Corporations literally are people in the law's eyes. Yeah, well, the law is retarded in a lot of ways, and that would be one way that it is retarded, Red Feather. I understand why they had to bail out the bank, says Red Feather. When you put it that way in that statement right there, I guess I can understand it too. But by principle, a failing business should not be propped up, is what I say in principle. It should not be propped up via bailouts, subsidies, or tariffs. America is run by retards, says the Crusader. Yep, I would agree with that. Yeah, it doesn't mean I. Red Feather says, yeah, it doesn't mean I agree with it. Okay, I gotcha. I mean, but anyway, that's all that I had today in this news stream. I'm probably going to like end this stream and maybe, I don't know, do a little bit of movie editing. I do not like banks or the Federal Reserve, says Red Feather. I don't think anybody likes the Federal Reserve. As far as banks go, the incredible Aspie. Okay, I'm not going to repeat that talking point fully, but Incredible Aspie says that he understands why banks should be heavily regulated because they're handling other people's money. He said at one point. Oh, hello, Pitt. How are you doing? Pitt says in the chat, Ray Dalio has an amazing video on the economic machine. I'd recommend it. Ray Dalio or Dalio, however you pronounce that. Have you checked out what is going on in Germany? Says Red Feather. No. What are you talking about? What is going on in Germany, Red Feather? Can you send a link in the chat, maybe? Or maybe you can, if you have like a Twitter, you can tweet it at me. You can tweet it, the link of the article to me at the Dark Con. That's a capital T, capital D, capital C, one word, the Dark Con. Who needs regulation? They have the FDIC. I don't know. I'm not able to. I don't have Twitter, says Red Feather. Okay. Okay. What should I search up on Google if I was to find out what you are talking about is going on in Germany? Okay. So I think I have all these articles saved down in the description of the video here. Let's see. Looks like it. Oh yeah, I also have my Twitter linked down there in the description. Twitter.com/thedarkcon. All right. But look up Chemnitz protests. Okay. So we'll close down some of these tabs right now. Oh, wait. No, I just brought myself to YouTube. Oh, well. Google. So, Chemnitz protests. All right. Enter. Chemnitz police order far-right protesters to go home. Deutsch well is what the source of that is. I'm going to have to read that on a future episode of Strike Force. Not this one right here because I'm pretty much getting tired right now. Some guys were harassing a young girl, and when people tried to stop them, they stabbed one to death and hospitalized two others. Ugh. Well, that's pretty bad news. YouTube. Ray Dalio is what Pitt says. Ray Dalio, the economic machine. I'm fat fingering all my keys here because I got my gloves on. Ray Dalio. How the Economic Machine Works by Ray Dalio. Okay, so I guess that's what you're talking about, Pitt. I will save that to my watch later list. And the Germans are pissed because the news is saying they need to understand the immigrants' culture. Well, here's the thing. You can understand the immigrants' culture, but how do you react to them is the question. And I would not react too kindly to the immigrants' culture, at least by what I've been hearing, what they have been expressing their culture to be. That being raping and, well, just in general raping. And killing if you are an infidel. And yes, they are calling them alt-right, says Red Feather. Okay. Wow, Germany is going down the shitter. That is the entire European Union, Crusader. This is the reason why the UK is trying to do Brexit. But unfortunately, Brexit has not taken full fruition, so they aren't completely split off from the European Union. Red Feather also says, well, I guess they're saying the Germans shouldn't have intervened and then the immigrants wouldn't need to be jailed. Crusader says, well, I guess Europe is. Yeah. Although, as far as I know, Poland and Switzerland are doing fine. All right. That's what I meant, says Crusader. Okay. All right. So I'm going to have to watch this video recommended by Pitt later, How the Economic Machine Works by Ray Dalio. And I'm going to have to check out the Chemnitz protest and find an article that I will find fairly reliable to read about this. Because I'm getting a whole lot of mainstream and unreliable, like New York Times, DW.com, which I think is Douchewell. Douchewell. I just notice how I'm pronouncing it, like douchebag. Well, I hope they can all take their countries back, says Red Feather. I'm pissed for them. Yeah, well, we all wish that to be the case for them, Red Feather. Sweden is fucked in general, says Crusader. All right. So anyway, if there's anything else in the chat, I will quickly read it, but I'm going to wrap things up. So yeah, what all I said about tariffs, don't approve of them, don't approve of the minimum wage, don't approve of all the jealousy against rich people having more wealth than us blue-collar working people, and so on and so forth. And I'm probably going to end the stream and work some more on editing, editing my Ratchet and Clank movie review. That will be fun. Anyway, this has been the economics news on this episode of Strike Force News Stream. You know what? I'll probably host a stream sometime talking about all the different political groups on YouTube. Like you have the skeptic community and all the SJW communities and whatnot. But I think it's kind of unfair to call them all SJWs. But that'll have to leave for a later video. See y'all later. Take care, says Red Feather. Yep. You take care as well, Red Feather. Anyway, I'm going to wrap it up right here. I'm the Dark Conservatarian. You all have a good Labor Day weekend. I'll see you later. God bless. Goodbye.